TGIF. Hello, Face. How are you? We have a power-packed day in store for you. Greg Horvat's going to be here in the opening hour. And we have a great guest in Tom Malone. I see Tom's in the room. Tom was fortunate enough to work for a market wizard, hey, Nobel, Dr. Martin Zweig. Everyone remember Dr. Martin Zweig? He said, don't fight the Fed. And Tom has some market calls that he's going to be making here. So he's going on the record with some things here. How are you doing, Tom? Dan, hello, buddy. Windsor. So there's a reason why they call me Coach. Everyone should have had a pretty good week in the guppy. We called it up here as a stop hunt and divergence. And then this was Tuesday. Wednesday said cover in here, at least half with a BE stop. So if you did that on half, you picked up probably close to 200 pips, and you still had half on. And then I talked about putting out sales again at 147. The high was 704. So we have another 90 pips on this position, and you could probably trail your stop above today's high for BE on the remainder, right? And lock in 50 on the other original position. So this wasn't all my idea. My trading warrior brother and sister, Grega, even Blake, Steve's still short guppy, I'll bet. Basic Technical was pointing towards the same thing, that this was going to be a failing rally. Hey, Steve.
Good morning.
How are you?
That's my chart. You remember
that's
we
yours.
said
all right.
At least we're going to get an ABC, at least, at the very least.
Right.
And I wrote
All
specifically
right.
yesterday that at the very minimum, I'm expecting 144.70 to be tested, and I think that we're on our way there. So at the very minimum, I expect that.
Okay, so that would be like equality of the first 200 pip break, something like that, or low.
I hadn't measured it because we still hadn't found a bottom. But for me, that's
Right.
a level of interest. That's why I said that I like that level. Now we can measure it together and see if we have a confluence with the quality as well.
Okay, and who was on it as well was Nick, showing this harmonic pattern right here. And who was on it as well, who's going to be with us in the opening hour. The Elliott structure was pointing towards the same outcome, Greg Horvat. Okay, so he was looking to sell this failing rally here, and he's looking for a little lower than what Steve Volge is looking for. So I had a great week, and I just want to point out something that I know Steve covers everything. Mike, when you're on, we'll do the interview at the top of the hour, Tom. I'll make you the presenter, okay? So I knew guys, and Steve and I don't completely agree on this, but I knew guys at the Merck that never left one trading pit, and they were millionaires, okay? They weren't portfolio traders. They didn't have 10, 15 positions on. And Jack Schwager says, find a trading style that fits your personality. So later in my career, I'm better at focusing on just a couple of things at a time. And even sometimes, if I have strong conviction about a path that a market's going to take, a count that the market's going to take, if I start looking at a bunch of other things, I get distracted. So it's okay to stay focused on one market. It really only takes one. You could have been long spiders for 3 years and been rich. You didn't have to, that's why people buy ETFs instead of stock picking. So until the pattern's played out, then you move on to the next. And I don't think the pattern plays out until we get something like this. Maybe it's going to be early next week. So just wanted to let you know, find out what you could do. and what you're comfortable doing. I'm saying for me, yeah. Well, John, but you have different conviction levels on different instruments. So when you really see something that's a setup that's been developing for a long time, that it's beginning to move in that direction, you can let go of, you know, a lot of things and concentrate on that position until it's played out, and look at a lot of things, because, you know, you don't, there may be times the guppy's not offering anything. But I'm saying that, so for me, I don't have the capacity to have 10, 12 positions on at the same time. I've you know, pretty much always been one at a time. So you can be successful trading one market, is what I'm saying. But it's good to look at others, because sometimes that one market you're looking at is a no trade, and if you want to trade all the time, like Steve says, he scans everything. I mean, I know, like, you still have to be a scanner, all right? But you don't want to get distracted at the same time, because, you know, if you really have something that's working for you and you do something else and you're taking heat on it, it might affect your decision making with something that's working. How many in here have liquidated a winning trade just because you took a loss somewhere else? Or you even worse, fought the loss and took the profit to cushion the loss. Recipe for, that's why, see, I have two. So that's a recipe for disaster, because you really should be letting go of the loser and staying with what's working. And a lot of people don't have the emotional, mental, psychological stamina to do that. Okay, so that's the end of my lecture today on what's happening in Guppy. Well, you know, Steve, I just can't help being Coach Popovich, man. I try to stop. Huh?
It's Blake, but yeah,
Oh, Blake,
man, I love it, Coach.
All right, man. You're on my team. Get out there.
All right.
Explore for us. All right, Blake. How are you, buddy?
Good. Stand by really quick. Hold on. Okay. I'm sorry.
That's okay, buddy.
He needs to put his sneakers on. How else is he going to go in the filming?
So I hope everyone in FACE had a great week, or at least a good week. So I should get a bunch of Y's on this. Who had a good week by earning and learning? There's one Y for Marie. A lot of great actionable ideas came out of the ForexAnalytix, the dream team, all week. Great week. And look at that call Blake made yesterday with Aussie on the precipice of a breakout. And good call yesterday by Chris Kerr on a continuation move in Aussie Kiwi. Having a good day. You guys on the Aussie Kiwi? So you weren't even late if you bought yesterday's close, which was like a confirmed breakout. Okay. And there are plenty of things like I don't know what to do with right now, like Euro. I mean, I don't know what to do with it. So find something. Really, over time, you're going to recognize patterns that will become familiar to you, like 3 drives are to me. And you can just sit. You can just sit and be patient and wait for those. You may not have action every day. But if you need action and there's nothing on your screen, go to the horse track. Go to the casino. Don't force trades. Okay? The good trades are going to be so compelling you're not going to be able to resist them. Don't wake up in the morning and start scanning and go, oh, that looks good. There's no planning involved in that. Euro is shortable. Yeah, okay. Good for you, Alexander.
There was a 4% assumption of a GDP in the beginning of the
Yeah.
quarter. We're back down at 2.5%. Does that remind you of something, by the way? I feel it's the
Yeah, the last I don't know,
billion
6
times.
years.
I feel that the only thing that's missing is Bill Murray from the Groundhog Day.
Okay, yeah, I agree with you. They plus inflation targets, so they failed miserably. What's interesting though, and I saw someone point this out, Steve, is that before Trump, the Fed was always, and I even remember Bernanke saying, well, when we're in the midst of recovering, will we have the political will to stick it out? And he was implying that we needed fiscal stimulus, right? And if you noticed, the Fed agreed. Bernanke said it, but Yellen right now isn't saying anything about.
You're right, but
stimulus.
I have a very important question. Okay, I've been reading about Keynes theories since I was in, a first year student in the university. Okay.
I know you started reading him in kindergarten.
No, actually no, because both my parents are architects, so I had no stimulus having to do with being an economist or in finance or whatever. I get attached to that like quite later. I wasn't sure what I would do until the age of 16 actually.
Okay, you were going to be an architect like mom and dad.
No. I never even considered it, and they never even pushed me towards that direction. I mean,
okay.
They were of the opinion that I should have found something that I like to do, so they never pushed me. I do like architecture in the sense I notice things. I renovated my house on my own, but I find it more like a hobby, not like something I would do. And I'm actually very lucky, because if I became an architect in Greece with the financial crisis, I would probably be in a poor house at the moment.
Yeah, they haven't been building much, but the Greek stock market's a star performer in the.
Of course it is. Of course it is, because don't forget that for the past few years it was pricing in a very high likelihood of a bankruptcy and a hard exit of the Eurozone. So now that the possibility of a hard exit from the Eurozone and a return to the drachma, which would have been completely destructive for the Greek economy for several reasons, the thesis here is not that for a country to go back to its currency is something devastating, but in the case of Greece it would have been, because there is no preparation, and there is no let's say proper
structure for it.
Are you still saying that's not possible, Steve?
Sorry, mate?
Are you still saying that's not possible?
No, I'm saying that if it happened in Greece, it would become Venezuela within a month.
Venezuela without the oil.
Is it off the table now with everything that's happened with Brexit, surviving Brexit, and then the French elections?
At the moment, it's a very low likelihood, and the current government, which is rather dangerous, is on its way out sooner or later. I mean, whenever we have elections, they're gone. And, that's something positive, because these guys, just to give you an idea, claim that they are leftist, and, half of them actually claim that they're communists. So, what else is there to say? When somebody in the 21st century claims that they're communists, it's either of the two things. They're either completely ignorant and uneducated of what that means. So, obviously you can have people like that governing, or they are extremely dangerous, and what they have in mind is building a dictatorship of their own, because simply you can have communism without having a dictatorship, because communism leads to poverty leads to rebellions are only getting suppressed by dictatorships for a period of time, because that they always end up failing as well. So it's for some things, the only thing you need to do is just have a little bit of knowledge of how history works, because we humans like to repeat the same mistakes over and over again, simply because we don't like to study history.
Very good, Steve. So I'm going to hand it over to Blake. He sounds ready.
Yes, hand it over to Blake, because we have a lot of interesting charts to look at.
I'm going to take it.
I just wanted to point out, though, that this is now on my radar screen. euro for a possible third drive. I don't think it'll happen today, but it's on my radar. Go ahead, bro.
All right, sounds good. I had the Nasdaq up here. We're just pushing that trend line once again, but we did, respect yesterday at that support, which, I still got a short position on. I really don't mind it up here because if you look at the European markets and you look at the S&P, they're starting to roll over. Everybody said, oh, it's going to be, a higher, a low inflation number, which we did get. So they're going to rally tech. Well, you know what? The market is just going to be opening here in a few minutes, and that was a weak retail sales number. I think it's weak data in general. So we'll see how the open plays out. But
how were the bank earnings, Blake? Because that a lot of them were coming out this morning, and
yeah, I think they're all pretty strong. They're pretty strong, but you're still seeing, like I said, the European markets are rolling over. The S&P's already given back its gains from the number. The Nasdaq may outperform a little bit right now, but we'll see what happens with the rest of the market. The euro spiked up through this resistance. I'm not going to spend a lot of time on all these because I know you guys are going to drill through them. But the Aussie dollar, this is huge, guys.
Great call, Blake. You were spot on showing the imminent breakout there.
I mean, it is just,
at the minimum, no one should have been short Aussie that heard you yesterday.
No, I don't think so. And you've got the Aussie breaking out. I'm going to give you a couple of freebies here too, here in a second.
Freebie Blake.
Call me Freebie Blake. But you got the Aussie dollar that's breaking out. The Aussie New Zealand is just on fire, which it kills me because I'm not long right now, and that just crushes me too. But take a look at the peso. The dollar peso is just getting destroyed right now. Another big chart out there, and this is the chart that I think everybody should be looking at, is this U.S. dollar Japanese yen, which we have a head and shoulder pattern. Everybody was well aware if you use ForexAnalytix ahead of the number. Here, where's my dollar yen? There it is. So dollar yen ahead of the number. It says possible head and shoulder pattern. So the possible head and shoulder pattern was right here. No, wait, here, let me find it. I have it right there. The possible head and shoulder pattern on the US dollar Japanese yen. A weak, you see here I put caps, weak inflation number could cause a breakdown below 112.85 support, which would be bearish. Now it's trading below the neckline of the head and shoulder pattern, so you got alerted there when it was at 112.50. So it continues to break lower. I am short, so it's I've got a short position, and I'll tell you what, if equities roll over, see this red trend line right here, and we're testing it right now. So I'll go back here. See that red trend line? We are testing it currently. If equities roll over here, this dollar yen's gonna, we're gonna see sub 112 probably today.
Blake, if this failure is major, like you're implying here, on Nick's work, even though she was looking and she was bullish from the bottom, looking for about 118, but at 115 area, she said it's possible if we fail from here that this was just a C wave, A wave from early in the year, B to the lows in June, and this is C, and the implications are, pretty bearish.
Yeah, I mean, and if that's the case, I mean, we're talking, maybe down towards the, sub 108 level, below here, which is entirely possible. Remember, the yen, like as a currency trader, you don't know how to respond in a risk-off environment because we haven't seen it. So when we get it, what the fudge sickle are we going to do?
Most people risk off in everything but equities, you mean?
Well, no, I'm just saying if we get risk off, everybody just turn around and start buying the yen because they don't know what else to do. I mean, and then on technically, you got a double top here. I mean, we could really. I mean, we break through like 105 or 108. I mean, we could trade down to 101, which would be I mean, you think about it, it's crazy. All right. So, and you look at equities. I mean, S&P rolled over, NASDAQ's rolling over. I mean, it just.
I've always been in this camp. You know, I've talked to Steve on the weeklies that, you know, that this still could be a big C wave. You pull up your monthly here, Blake, the bear case is really something.
And it might as well be, but we definitely need to see it close below the 112 zone.
Yeah, I know we still there's levels on the way down. Put up the weekly.
Yeah, this is the monthly right here.
Yeah, I'm sorry. It should have been the weekly. Okay, so basically the high from 124 to 100 was A or 1, and the rally is 2, and 118 is 2, and we're in for a C or a 3.
Which could take us way down here. I mean,
yeah, if you have a quality, it takes you under par. 25.
I mean, what if inflation starts spiking in Japan? I don't know how that's ever going to happen, but hell, you never know. I mean, you know, if they decide they need to normalize a little bit too.
They said that they're out of deflation. I've seen comments coming from the BOJ. We're no longer in a deflationary period.
We haven't seen hard evidence, though. We haven't seen hard evidence. Okay, so here's my freebie, and then I'm going to pass it over to Steve. So and I know Steve probably will cover it anyway. Here's gold. Okay, so gold just broke out of its channel. We have an inverted head and shoulder pattern, and that inverted head and shoulder pattern points to gold's had the crap beat out of it. You know, everybody's like, oh, Bitcoin, Ethereum, all cryptocurrencies, gold's going to hell in a handbasket. Everybody's short gold. Well, you know, maybe everybody's short gold, but it may see, you know, mid 1240s, maybe 1250, just in this, you know, in a squeeze higher. I mean, this is just a real simple. There's a lot of things that are playing into this particular move right here. Right. But if you think about it, it's a double top. Right, double top here, false breakdown, reversal. So
good eye.
What if you start squeezing all these gold people? You know, next thing you know, you're trading at 1250, and that, you know, that
and sentiment and positioning. Sorry to interrupt, Blake. Remain on the extreme side.
Show the blog post where.
Show
the blog post where you guys were talking about this last week before it happened.
Well, I'll let Steve do that because I gotta go.
Okay,
yeah, I got my nephew coming in here today. He's going to be helping us with some admin stuff with ForexAnalytix, and so I'm spending.
He's with Blake, the slave driver today.
That's right. I'm going to be slave driving over here. So you guys have a good one, and TGIF to everybody here.
Have a good trading day, Blake.
All right, buddy. Have a great weekend, Blake.
Bye-bye.
I think Greg is here, isn't he?
No, I don't see him at the moment. When did he say he's going to be on?
He said he would try and stop in the first hour. So our guest today, Tom, and we'll get more details, but his biggest holding,
I can
he
tell
says,
you one thing for sure.
all of these are recorded, Robert.
Yes. If Greg has said he's going to be here, Greg is going to be here. There's no question about that.
Looking for 1310.
You know, I'm pretty sure that people want to hear to what Greg has to say. As always, you know, Greg is looking quite ahead with Elliott Wave, and from my experience and working closely with him for now more than a year, the guy is way more often right than wrong. I can tell you that much.
Oh, and guys, before Steve starts on his rundown, click the ForexAnalytix link right there. It's right there on the GoToMeeting software. That's a trial link. And I think most people made at least $1 this week. If you haven't tried a trial, you're getting everything really 10 days for $1. So you're spending 10 cents to get Elliott Wave from Greg, Harmonics from Nick, Sticks from Steve, Basic Technical from Steve and Blake, and Macro by our big picture astronomer Stelios. So just go ahead and click that, because, you know, I've been tweeting this, Steve, you know, and you brought it up yesterday. It's really a big point. You know, you probably can do great just being here in the room, because I mean, we give a lot of actionable ideas all day long, but really it's only an hour of analysis, and then we have a guest, an interview. And you need to have these push alerts on your phone from when you walk away from your desktop, so that you know you have Blake and Steve and Nick and Greg all working, and Stelios working for you. And you're going to be alerted whether you're in the grocery store like Blake is, he likes to trade from the grocery store, or anywhere else. So you're always going to be aware, you're always going to be able to assess if you need to do anything to adjust positions, because a lot of these push alerts talk about support and resistance levels being breached. So make an investment of 1 pip on a micro lot, and I don't think you'll be disappointed. In fact, I tell you what, if you don't like it after you spend $1, I will personally send you a refund. Okay? I'll send you a refund. So just let me know. I'll wire it to you. I'll wire it to you immediately. All right, Steve.
Okay, I see some people complaining about my microphone's volume.
Oh yeah, it's like that all the time.
No, it's on occasion. It's Windows BS glitching between different applications, etc. And sometimes, you know, the level is auto-adjusted lower, and you know, there's nothing I can do. Is it better now?
Yeah, it is.
Okay, good. Because sometimes switching between microphones.
See, I think you start liking this pair now. You were forced to follow it. You probably got long.
You're absolutely right. That's what I wanted to say. I actually got long yesterday at the close of the day, because at the beginning of the day I thought, okay, you know, that was a move to trap people long, but actually that was a move to trap people from getting squeezed out of their longs. And to be honest, I had no intention of trading it. I have a lot of trades open at the moment, so I had absolutely no
I don't know how you do it, man.
Yeah, I had no intention of trading it, but when I saw the move higher yesterday, and the fact that we closed barely above the neckline, which is like a few pips, I just put on a small position, and there was like, what the hell, you know, since we saw it, etc. But I didn't expect such a follow-through, to be honest. I already have an order to take profits at 1,073 at the bottom of this zone that I've marked here. And to be honest, I'm not going to even bother about it again. I'm probably going to trail my stop today below today's low, and I'm not going to bother at all, even, you know.
In the case of breakout, you're gone. That's your contingency. The contingency, if it's taken away, so again, coach. So you need to know where you're wrong before you get in. So Steve played a breakout, so where's he wrong? If the breakout's negated. You know, so always know why you're in a trade, so you know where you should get out before you do the trade.
Another new trade, you remember, Dale, how many times I said it was 3 days in a row, that if USD JPY is to move lower, it either had to do it from that exact point that we were testing at around 114, or then from 115.50, and we had shown back then.
Yeah, you showed the rising wedge last week.
Exactly, the 4-hour chart, because this was it. This was the move. You see?
Turn around Tuesday.
Yeah, I did not get short USD yen because I tend to be more biased to be long, but I did short, as you know, the pound yen, and since yesterday I'm also short the euro yen. I'm going to tell you the exact price as well. It was at the retracement, let me pull the chart up, it was at 45, if I remember. Let me show you.
Not to interrupt you, but I just want to let you know Greg is in the house.
Oh, perfect. So yes, it was here at 129.45. We had the where was it? Yeah, 129.45. I had put an order. I didn't want to make it a round order at 129.50 because you know how those things work sometimes. Although it ended up going higher, it went up to 70. So I sorted there. To be honest, I expected that it's likely to move to 130 as well, but I just wanted to be involved with it for at least one leg lower. So now I'm like 70 pips in the money, but you know, that's nothing because I don't use this is not a scalp. But to be honest, I'm expecting that we should see at least a move to 128 at the very, 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 very least, because you know there is a likelihood that we're going to go all the way down to 125.60, and I think the best guy to give us target for this trade is actually Grega, because Grega, you know, I'm trying to catch reversals. And I'm aiming, you know, at the minimum targets, and then I'm riding it if it starts working. But Greg, on the other hand, likes to look, you know, far ahead if possible, and with quite a good success ratio, having to do with, you know, always predicting further down in the future. Of course, decreases the possibility of a prediction to be right, but you know, Greg still maintains a high percentage of hits in his predictions. On the other hand, I remind you that we've established a short euro knock, which is working, which is still working very nicely. Okay, it's very nice because today we're seeing actually the 6th black day in a row. I'm short since here, as we've said in the webinar, just like just after I got short, and this thing is moving nicely, and I'm hoping that this is going to become a new euro CAD. EuroCAD is rebounding a little bit, you know, but you know, I haven't done anything with it. Blake already showed gold. You know, I'm not so convinced yet that this is a big reversal, but we had said plenty of times that 1,230 in gold is an important level. So Greg is going to give him his view, but for me, if we close above it, I turn back from being bearish to being neutral once again. That's not enough for me to be long the pair, but you know, I'm turning back to a neutral positioning in outlook, actually, because it's not positioning, it's a neutral outlook. Now, having to do with silver, I'm actually a little bit more constructive here because we had a stronger move lower. I want to see, as I've said, a close above 16, and if I am to get long one of the metals, it's going to be silver again. Not gold from what I see at the moment. So not yet though, not yet. Let's first get a daily close above 16, and you know, we take it from that point. And now having to do with USD yen, back to the daily chart, for me to turn bearish, besides having the wedge breaking lower, etc., for the time being we're just seeing, we saw it on the 4-hour chart, an ABC move. As long as this move does not close below this zone that I have here, which is roughly a zone between 111.60 and 112, I maintain a constructive outlook that perhaps this will end up being a correction lower and another move higher, at least towards 115.50, sorry, and we see what happens from there.
Negating the breakout of your red dotted line. Just a point.
Yeah, it might rebound from here, but you know, as I said, I cannot turn completely. And look at this. It's not only that we have this zone here. We also have the 200 DMA that has entered this zone. The 50 DMA, so the 200 DMA is at the bottom of the zone. The 50 DMA is at the top of the zone. We have this descending trend line that was broken and is currently almost being retested. So for me, you know, this is the do or die zone. This is it. If I see a decisive break and a close below it, then everything is possible. As long as we stay above it, I maintain a constructive bias, and that is why for euro yen, for pound yen that I'm short, etc., I'm for the time being looking at minimum targets. So since we spoke about the pound yen initially in your introduction, now that we have a more or less confirmed secondary high here, we can actually do, just forget about it. Let's go to the 4-hour chart because, you know, okay, now that we have the move higher, let's see what we get in an extension. We need the magnet as well. There we go. So extension yields a target of 144.50. And what did I tell you that my target is? It's 144.70. Why is it 144.70? Let's go back to the daily chart because I usually get my targets from there. It's because of this zone. You see it? It's because of this zone. So the extension also confirms a target of 144.50. We have the 38.2 retracement at 144.30. So, you know, somewhere between 144.30 and 144.70, if I see a strong reaction, I will tend to believe that perhaps this was just an ABC move lower and that perhaps we're going to get a continuation. So I'm going to collect my profits and call this a good trade and move forward.
Yeah, the fact that it's a double top up there, Steve, if you show the whole chart, gives it a look of an ascending triangle.
As we said initially, I'm not treating this in this case as a double top. I'm treating this as
triangle.
Yes. So for me, a break below this zone then should aim for roughly 142, which is this triangle support.
It's a bullish formation is my point,
I agree with you.
Measures big.
I agree with you, because this formation, even if it retests this, it is likely that it's then going to do something like this.
124.16, yeah. That gives you like, what's that, a 1600 pip formation? Gives you 164.
More actually. Now a friend was asking about CAD yen, and people were asking about CAD yen. I mean, even I'm actually thinking of going short this pair, although I don't like to short strength.
Someone's saying your pointer can't keep up with your brain.
I mean, just look at this. It's one of the occasions that you build a plan in your head, and it works. It works in a way that you are like, okay, how okay, I'm not going to say.
You feel like no. Come on, tell the truth. You feel like Nostradamus the last few months, don't you?
I mean, you think like, how freaking lucky could I have been? I mean, we were here, and they said
Nostradamus.
Yeah, I would want to see a move lower, a move higher, a move lower, and a move higher. And we actually got the move lower, the move higher, the move lower, and the move higher. It just happened in a much more compacted way. So if you're asking me, especially seeing today's, I mean, we got exactly what I expected having to do with structure. I did not expect all this structure to evolve in such a fast pace. I have to admit that in no case. But today's candle is also pointing to a reversal. And, you know, this steep ascending channel, I mean, you know, we cannot respect it for much longer.
Yeah,
so
that's like that's a fireman's ladder.
Yes,
on an
uprise.
Exactly.
So we've already seen all this price action happen in just a few days. So I think that now we might see this part begin, the one I'm moving. Okay. Let's see. I would actually want to see Gregor's count on.
So let's bring him on.
Bring him on. Gregor, you come on for as long as you have made, and I'm going to take over again to see more chats.
Okay.
Take over. Okay. Let me pass you the screen.
It's not easy, Gregor, to get Steve to give up the mic.
But for Gregor, you know, I do it in a heartbeat.
Yeah, all right. For Gregor, Nick, and Blake, he'll do it in right away. Okay. Hi, Gregor. Hi, Gregor. How are you, buddy?
I'm fine. Thank you.
Okay, everybody. Gregor, I've nicknamed the Wizard of Waves. I said he should get a surfboard avatar and show him riding C's and threes on top of the surfboard. So, okay, Gregor, that's kind of what I see. One more drive for 3 in Euro, and you think that completes up there. Interesting.
Yes, actually, I will first update you on, actually I was here on Friday, I think, and we talked about cable, pound yen, and crude oil, if I remember correctly.
Yes.
Right? Are you under the weather, mate? You sound a little bit like you have a cold.
Yes, I have it, yes. But I'm
Get
fine.
better, mate.
No problem. Sure, thank you. So actually, I will take a look firstly on cable. Now, if you recall, we talked about this 3-wave rise here in wave 4, right?
Yeah. Yes.
That wave C is an ending diagonal, and in such case, each leg should be made by 3 waves. So we were anticipating new highs, especially looking for minimum requirements, which means that we should take highs out from May 22nd. And if you recall, we were looking for this pullback down into wave B back to this trend line. And so far, it played out very nicely. We bounced perfectly from there, from that trend line, and it looks like that we are now in final leg up, wave C, which means that there will probably a lot of traders that will try to catch this uptrend, but I think that based on this wedge pattern, it may be a little bit too late, because as soon as we take out those highs, which are what?
Terminal, yeah.
2 pips away, I think it will be time to look and watch out for reversal signs. Of course, there can be an extension even through the upper resistance line of this wedge pattern, but definitely I think that it's a little bit late to join this trend. So
let me ask you this, Greg. That a great call on that. So I see a 4 up there. What degree? Does that imply taking out the lows from the flash crash?
Yes,
it's
exactly.
4. Okay.
Yes, I'm looking for another leg down to complete this downtrend. I think that there are a lot of investors that were trying to go long after this nice spike here.
Right.
So it was quite attractive trade, and that's why I think that this low matters a lot. There are probably a lot of stop orders down there, so I would not be surprised to see them retested before we get long-term reversal here. And also, I don't see this recovery strong. I see it that it's very slow actually, so that's not kind of a reversal when you want to predict tops or bottoms.
Struggling in corrective waves.
Yes.
Although, Gregor, correct me if I'm wrong, but sometimes wave ones can be slow, right?
Yes, exactly. It can be, but still, if you take a look here at this price, actually,
clearly, yes,
it's plenty of overlaps, right?
Correct.
So,
no, I agree with you.
Yeah, so I think that there will be limited upside here. So what I would watch for next week is, as I said, for reversal signs. If we see 5-wave drop, I think that I will look for potential short ideas. But for now, we still need to see how far this wave C can go. Of course, it's not over yet. Okay.
Thank you. Nice.
Pound yen.
I was wondering what the hell to do with this town until you got here. Now we know.
Yes.
Everyone know what to do with the pound? These two are freebies because this too is in the letter. So, you know, Greg is giving you some longer term views, but, you know, he goes shorter term sometimes, and his hit rate's phenomenal. So thank you for sharing this for free, Greg.
Sure, that's why I'm here. I like to share, and I like what I really like is to try to explain the wave counts as simple as possible, because I want that other Elliott Wave traders will be able to find some similar approach like me. You know,
yeah, and you know, Greg is recognized. He's won awards at FX Street. What was your category for the award when I interviewed you a year or so ago?
Best technical analysis or something.
Okay.
But
no one else has ever called you the Wizard of Waves, have they?
No, only
so that I think that's a bigger reward than, you know, than what you got at FX Street.
Okay, so what we have on pound yen, we said that we are probably in a triangle. We are at the upper side of the range, and we expected limited upside. We have seen a nice sell-off, clearly in impulsive fashion, followed by this bounce in the last 48 hours, which is struggling. So I think it's only wave B, and that we will see probably more lower levels here. I'm definitely expecting wave C drop. Either this will be just limited wave C that may stop around 144.
Was that an ending diagonal at the top at 5? Would you label it that way?
Yes, you can see here on the right on 1 hour chart.
Okay.
I labeled it as a wave 1, 2, 3, 4, 5, and then typically you will get a very strong drop. And normally when ending diagonal is complete, you will see a retracement all the way down to the starting point of ending diagonal, which was here. And you can see this was triggered, but since this unfolded only with one leg in 5 waves, we know it should be part of a bigger 3-wave decline. So that's why
Gregor, do you expect the next leg, the C wave, to also unfold in 5 waves?
This upcoming blue wave C?
Yes.
Yes, of course, because zigzags, as you know, are 5-3-5 patterns, which means 5 waves down for wave A, 3 wave bounce for wave B, and then you expect 5 waves down for wave
I have a minimum target at 144.70, to be honest, but I see that you're targeting lower. The lower the better. I'm absolutely fine with that.
Yes, the lower the better is because I'm looking for a triangle. You know that in each leg in a triangle will ideally reach the extremes, right? Which means that in either scenario we will retest this trend line support, but it may not be the case. So as long as we will complete a 3-wave decline, which would be confirmed only if we will turn impulsively higher again, that's when I would label a completed correction. So either that will be at your 144.70 or a little bit lower. It doesn't care. It's actually
by the way, since
once we get the C.
Since we were talking about it when I gave you the screen, do you have a count for CAD yen? If you happen to have one.
No, I don't have it, but I can take a look. Just a second.
Take a look out of curiosity.
Someone's asking wave count on USD MEX with it getting obliterated here. If you have a chance.
Yes,
yeah, and I know as a fact that he does have a count for it, so he's going to show us.
Oh, okay.
He has a complete count for it.
Okay.
Okay, so here, A, B, expecting wave C rise.
What about the shorter term pattern?
Oh, Steve, you want to see if your lines are right? Agree with.
I see 1, 2, yes, 1, 2, that's very clear. And this is wave 3, but in which state? Okay, so you think we are currently at 4 of 3?
Just a second. Okay, I can see that.
1, 2, 3 of 3. Yeah, this is an extended third. There is no question about it. 4 of 3, 5 of 3. So I'm actually right. We are turning lower here for at least 3 waves lower, correct, Gregor? Which should at least bring us to 87.50, I would guess, because that's my initial.
Actually, I would be looking maybe for slightly more upside. Maybe it would be like this. I don't like so short or small wave 5 compared to wave 1, right?
Yes, you're right.
So that's why I would label it like this. Okay.
Oh, like an ending diagonal for it. Yes, why not?
Another leg higher, and then we turn to the downside. And now, if I try to compare, you have here 261.8 up there. Okay, so that's first resistance, and now we will also compare wave 5 to wave 1. Second.
And now, guys and gals, you see how a pro works with Elliott Waves.
0.60. So maybe we'll get a little bit more upside, but definitely above this high, I would be looking for and expecting.
For a short, yeah. Okay. Well, let's see if we get another high.
Yes. Let me also check this one.
But we're definitely very, very close to a turn lower.
I'm also looking at wave 3 at a higher degree. This red wave 3. Okay, we have a 261.8% extension right now testing. Okay, so there's definitely reversal zone.
Yeah, it's definitely overdue for, yes.
So I would be expecting that definitely in final stages of some fifth wave here. Okay.
Perfect. Since we are in the yen pairs, if you want to show USD yen as well, because a friend is asking before we go to the USD MXN.
Yes. Actually, what really matters here at dollar yen is that this decline was 3 waves. We know that 3 waves are corrective waves, so either this is a completed 4th wave or it's part of some complex correction. And which complex correction could be here happening is actually a triangle. I can also relabel this one very quickly. So to give you an idea.
Your weekly looked pretty negative.
That was alternate count.
That's an alternate count. He always keeps alternate counts, yes.
Okay. So eventually it gets to what Nick is looking for and Greg up towards 118 again.
Let's see. Okay.
Yeah.
So I would be looking maybe for second count, something like this, which means we would stay sideways. But
so in this case, a lot of choppy price action. We're going to be chopping people up, being short, being long, being short again, etc.
Yes, but I'm still looking at this as a primary count. If we consider that maybe we accomplished here wave 2 and we are now in just another short-term correction for another wave 2. The reason why I'm looking at this potential new turn to the upside, let's say later this month, is because 10-year US notes moved and made quite nice a reversal to the downside. We are higher today, but I think that there can be limited upside. So if we will, actually I have this one here.
I was saying to Dale before as well that my main scenario is a 3-wave pullback to 111.60 to 112 and then a rebound from there. So as long as we remain above it, I also maintain a bullish bias as my main bias.
So then actually it's going to be mainly after the pound peaks, pound weakness to take the guppy down to those targets rather than the yen.
Yes, it can be just in general pound weakness if we completed that ending diagonal.
Yeah. Okay.
Because ending diagonals are, as you know, are very strong reversal patterns. They will cause a sharp drop, and if this will prove correct, then it can be pound weakness all over the board. So I'll not be surprised. So this is the 10-year US notes. You see a 3-wave rally. Seems like a wave 4. So I'm expecting more weakness. We came down quite nicely. Maybe that's only a temporary bounce. And if we'll see next, at least third leg of decline, that's when you should also get another leg higher on dollar yen. Okay, that's why I'm looking for this still to be primary count, but if we'll get on just stay sideways because we are in the middle of summer, then definitely I would keep an eye on the second count, trying anyway for.
Greg, on the notes, it would still be bearish, wouldn't it, if, say, for example, this bounce has more legs and challenges the recent high before they turn down? Would you see as a low probability in the notes?
In the notes?
Yeah, in the bonds, yeah.
Yeah, okay,
I mean, you know, if we went and took out C, that's no one's looking, everyone's bearish now, but if we went up one more time, it would still be a 4, right, if we took out the C?
Just more complex correction, yes.
A double zigzag, for example. I think you meant
XY.
Okay. Thank you, buddy.
No problem.
Grega, I know that a lot of people care about it. First of all, we still owe the USD MXN to our friend that has asked. So why don't you show that? And I think that after that, people would want to have a look at your view having to do with US stocks at the moment. I know that a lot of people are looking into them.
Okay. So firstly, dollar against Mexican peso, I see it in a corrective phase, still wave A, which may stop at this wave 4 levels. So I don't think that we are far away here, expecting a rally and then more weakness. I thought that when we got this bounce a few weeks back that we are already in wave B, but it appears that the market wants to test this 17, not 18. Firstly, I suggested bottom around these levels, but since these supports were broken quite decisively this week, I would not be surprised to see wave A bottom much lower, and then we go higher for wave B. So in general, I see dollar Mexican peso in downtrend, but would expect and be aware of this correction before we get more weakness, because I think that we are at late stages of this first leg.
Yes.
Thank you.
Okay.
Thank you.
Now, having to do with stocks, what do you see? I said like a few days ago, I said, obviously that's your field, but I said that you can't get a cleaner ABC than the one we got in the NASDAQ. I mean, it was almost perfect to the pip, the ABC we had in NASDAQ. And, I said that, listen, I cannot possibly be bearish seeing an ABC and the overlapping price action of the correction and the fact that we're breaking above like the bull flag, because in essence this ABC correction in the NASDAQ was, if you look at it from terms of simple technical analysis, it's like a bull flag, right?
Yes, of course.
So I said, like, listen, in my opinion, this thing is going to new highs, but I think you are the perfect guy to tell us how high is the new highs.
Well, he nailed the S&P for retest of that low last week and then looking for new highs. So that was a great call, Greg.
Actually, it was a perfect combination, even if the price structure was slightly different compared to NASDAQ and S&P 500, but S&P 500 actually made a triangle, a perfect triangle. I have it here. And we were tracking this triangle quite closely, A, B, C, D, E, and then said that this 32 should be a bullish breakout. And so actually that was a triangle. It's a continuation pattern on the S&P 500 at the same time when NASDAQ actually completed this free wave decline here for wave 4. Okay, so both markets made a perfect corrections within uptrend, and it looks like that we are going much higher now, especially on NASDAQ. It appears to be, sometimes as you know, NASDAQ it appears to be much stronger compared to the S&P. So I'm looking this one to reach this upper trend line of this Elliott Wave channel. So that would be my objective. You connect these lows of wave 2, lows of wave 4, put a parallel trend line firstly at the top of wave 1, and then another parallel line at the top of wave 3. So actually that would be my zone here. Let's say around 6,000, okay, NASDAQ 100.
And that will still be the end of a third wave, right, Gregor? So you expect a pullback and a new highs then again?
Based on this structure, if we look at the price action from that low here, definitely I'm expecting more upside. But of course, we will see how this reversal, once we get wave 5 completed, red wave 5, and we'll see how this reversal will...
If out of curiosity, let me play the devil's advocate here. If out of curiosity we see like a bigger rejection than you expect from what you have marked there as a fifth wave of wave 3, what would an alternative count be that would actually justify that being the end of the trend? I mean, how would you alternatively count it to justify?
How I would level the chart. So actually probably I would move this wave, red wave 1 here, okay, and then make blue wave 5 here.
Okay. Yeah, got it. Yes.
And then
so there is an alternative count that might get the next push higher being the terminal leg of the bull trend. There is such a count.
Yes, of course it is, but there's definitely better, and I always, when I'm analyzing...
No, I agree with you. You see,
yes,
more likely, yes.
Try to level the wave count so that I stay with the trend and expect more, because, you know, calling tops, calling bottoms, I know that back in 2000, here's the S&P 500 here, back in 2011, 2012, I know that I remember pretty well that I was looking for a top and expecting a reversal, and everyone were actually, as soon as the spot 5-wave declined, they said, this is it, we are going down, okay? But there is a line when you need to say, you know, better to stay and level with the trend until it lasts. So don't wait and call a top, because
although there is no question anymore, and that's also obvious from your counts there, that we are at a very, very mature phase of this bull market, at a very mature phase.
But in these stock markets have normally, in the last seconds of the bull market, they have extensions like mania cycles. So still, if we expect this to be
Neo cycle? Neo wave.
New wave.
Curious.
No, I have no idea. Actually, that's based on from psychological perspective. Okay, normally you will get a very extended move on stocks, and everyone will try to jump in. But normally, when this extension is already very big, too big. So, but if we consider that fifth waves are extended, okay, we are now still only at equality level compared to wave 1. Okay, and consider the fact that this on the S&P 500, if we take a look closely, wave 5 still does not contain 5 subwaves. So I think that we will see an extension higher. Okay, and normally this extension higher will occur and take prices above this upper channel resistance line. So I think that we are in that we will see extended fifth here and make much higher highs, and then maybe turn to the downside when it will be least expected for some. But normally how these stops are confirmed of an extended waves so again, here's Elliott wave channel, connect wave 2, wave 4, put the trend line at the top of wave 3, and if you see a sharp move out of this channel and then a reversal and decline back into the channel, this would then be a top.
Okay, so you look for a throw over and then for it to negate the throw over.
Yes, and I'm expecting this because, as I said, if I level this 1, 2, we need wave 3, 4, and wave 5, okay, to the upside. So I think that there is a chance to be extended wave because short-term waves suggest that this fifth wave is still ongoing, not finished yet.
Thank you, Grega.
Grega, people are asking, Dale has to go in an interview, people are asking about oil, about crude. If your outlook has not changed since you made the video, we can simply tell people to go on our blog, on ForexAnalytix. You can find a video with Grega analyzing oil. So has something changed with your view in oil, or should they just watch the video?
Actually, I can take a look here at crude oil. Nothing has really changed. You can send them the link, no problem. Actually, we can see nice formation of higher highs and higher swing lows here back from July 10th, actually from start of this week. So I see third wave in progress. Either it's going to be wave 3 or wave C. There is minimum requirement, which means that we should take out this 47.
I just put the link, by the way, as well in the chat, so you can check the video here. He speaks for more than just oil. And another question, a fast one, there was somebody asking about gold. If nothing has changed, I remember that you're still conflicted about the counts in gold. Is that right?
Yes, I am. But for the short term, I was looking actually for this recovery after completed 5 waves down, and I'm expecting a retracement normally back to the area of a former wave 4. Okay, so that would be here. And at the same time on silver, I was also looking for third wave up, either that was wave A or wave 1, wave B or wave 2. But if we are either in wave C or wave 3, minimum requirements suggest that we could see even move close to $17. There was also former wave 4. So I'm expecting more gains to be here.
Perfect. And very fast answer, that's the last question we had about Euro Pound. If you have a...
yes, Euro Pound, it's actually having a very nice wave structure there. I think that since this spike occurred, last year, I think we are in a corrective phase, and this decline within a corrective phase is expected to extend much lower. We had wave A and now a free wave bounce. I think that this free wave bounce can be finished. First thing is because here within this wave C, final leg of a free wave recovery, we can count 5 waves up. And here's this 4-hour chart which suggests that. And I was looking, as you can see here with the arrow, for a reversal here. We moved nicely into 261.8% extension level. So I was looking for a top of a wave C to complete wave B. We came down very aggressively. More importantly, we are breaking this trend line of an Elliott wave channel, which normally is confirmation that the 5-wave movement is completed. So in that case, you would expect at least 3-wave drop, but ideally it will be a 5-wave drop. So I will watch out for pullbacks, and we'll also keep an eye on this trend line, broken trend line that could turn into resistance. One more thing why I think it's very nice confirmation. I want to take a look at technical.
We talked about one more high last week, Greg, remember? That's exactly what happened.
Yes, yes, and when I said that stop should not be placed there, only add to your position.
Right.
Right, yes.
Yep.
Because it would be because it's always tricky to look and call for a top, but current price action, okay, it's much more powerful based on bearish view compared to the last week price action. You can see that that's probably the strongest decline, bearish leg compared to any leg within previous sell-offs, okay, since market went up in April. So clearly that's the powerful leg. And also here you can see we have already 3 bearish soldiers actually, and more importantly, I like this candle very much, and it appears to be a very
outside black candle. This is a huge reversal, huge,
yes,
huge
exactly.
weekly candle.
So we have actually, I always like combination candlesticks with the Elliott wave principle. Okay, calling a 5th wave, it's a little bit tricky. You need to see a reversal, but not only a reversal, you need to see an impulsive reversal. And clearly we have an impulsive reversal, okay? Here that's an impulse.
I tried to tell Steve earlier in the week, he needed more confirmation.
Okay, and he got it now.
Yeah, he's got it.
Yes, so Elliott wave principle suggests weakness. Basic technicals suggest weakness. Why? Because we have here a broken trend line, okay? And then you have bearish momentum that will stay bearish today on Friday. So this puts a nice reversal candlestick in, and I think that there is a lot of indicators that suggest more weakness. Okay, so definitely I will be looking for trades on this one, but would need a free wave rally.
Thank you, buddy.
Thank you.
Thank you, Dale, for having us. Thank you, Greg.
Oh, thank you, Steve, for having me, and your patience, and everyone's patience for having me. I also want to thank Tom Malone for his patience. And Tom, I'm going to make you the presenter now. So I look forward to hearing your voice and seeing your screen. Thanks for waiting. We had a lot of stuff to cover today. Appreciate it, my trading warrior brother. So Tom, looking forward to hearing your voice. Tom Malone, Twitter handle at Tom and Krishna. Runs a room. Was fortunate enough to work with Dr. Martin Zweig, who's famous for his expression, "Don't fight the Fed." So just waiting for you, Tom. I see your screen. Waiting to hear your voice.
There, I'm unmuted now.
Okay, great. Tom, so nice to meet you.
Great to meet you. You guys do a wonderful job. Boy, I spent the last half an hour looking at more charts and seeing more new information than I have in the last month. So I appreciate you guys being here.
Well, thank you very much. We're pretty proud of the team. You know, we brought in, it's unusual, we brought in experts with different disciplines, you know, Elliott, Harmonics, Candlesticks, and, you know, that way people in one place, instead of subscribing to different types of methods, can get it all in one place. So, you know, how fortunate were you to work for Dr. Martin Zweig? I usually start by asking people what their journey was like at the beginning of their career. So was that your first job in the industry, working with Martin Zweig?
Actually, no, but it was actually the highlight. It was a menial job at the time, but as you know, time flies. That sounds like we're probably about of the same generation. Don't know for sure, Dale, what year you were born, nor would I ask. But
oh, it's okay. 1953. And yeah, so menial jobs, yes, Tom. I started as a runner on the floor of the CME. So
yeah,
you know, you have to start somewhere. But why not start in an environment where you're going to gain all kinds of knowledge that will more than compensate you in your future? Even though short term, it's like the markets, you know, you don't always get immediate gratification on a trade. Sometimes you have to sit through a drawdown before it manifests. So what was it like working for Marty? And he is the guy that's famous for saying, don't fight the Fed, right?
Right, and what an apropos last decade, as the Fed has taken on new meaning, hasn't it, worldwide?
I wouldn't have believed that it would that we'd have this outcome last as long as it has.
Yeah, it seems like it caught on in the Bernanke era, and now the world has micromanaged this, so it's almost like it's preventing any type of pullbacks worldwide. And again, whether it will continue to be this way for years to come, or whether I always give my members and people that will listen to me long enough the example. I grew up in Clinton, Iowa on the Mississippi River, and as you know, they put in a whole system of lock-in dams from Minneapolis down to New Orleans. Right. But occasionally those dams have gotten run over, and I think the markets are like that. The Fed can put up all kinds of artificial places, but when Mother Nature is going to work in the fear and greed process, it's going to work. I always like
and the Mississippi changes direction sometimes, doesn't it?
Absolutely. There's times when Mother Nature plays some little tricks, but it was an interesting life. Again, looking back, my first real job was we had a place right on the river that shipped out corn. Okay. It's now an ADM plant, but I got to see firsthand what trading corn futures was like when I was a sophomore in high school.
Wow. Yeah. I went to college in DeKalb. That's corn country.
Oh, so, my goodness.
Yeah, yes. Go ahead.
Yeah, I was going to say, there's several universities around DeKalb and up there Bloomington, and that is great.
And I didn't even have an inkling I'd end up trading it when I was there. But interesting. So what did you do when you were with Dr. Zweig?
My first job with Dr. Zweig was kind of like was just to be an extra person. He was just starting out his famous Zweig forecast. We had met. He was a little bit older than what I was, but not too much. I was a non-traditional student at the time, going back to get another degree, always looking for education even back in the day. And we met through different channels, and before I know it, he had started up, had been very successful with the Zweig forecast, and then he was just started. He needed more people to stuff envelopes, believe it or not, for his Zweig's ratings forecast, which was the second actual where he just started using, believe it or not, as he was a groundbreaker, started using computers to rate kind of like Value Line does, and some of the other ones rate them on a 1 to 10 basis on timeliness and value and things like that. So I was a envelope stuffer and had my ear wide open as I was an active trader also at the time.
Okay, so you're a Fed watcher, Tom.
Oh yeah.
Mari said don't fight them. You know, every time it looks like the market might be due for a correction, even though the Fed has tightened, what, 3 times now? You know, that old Wall Street saying 3 hikes and a stumble hasn't happened.
3 steps and a stumble, correct.
3 steps, so 3 steps and a stumble. I've stumbled on less than 3 steps, but where's your head at with what's happening in the Fed? And I notice in your tweet that you sound like you have a lot of conviction about some turning points in the market, and be interested in seeing some of your charts and what's on your radar.
Right, I don't have much in the way of charts. Hopefully I can borrow some of yours, but the big key I want to throw out there is again that not only the Fed used to be back in the day, and when we had been going through the business and really got involved, the Fed was very, very non-transparent and would do things sometimes in the dark of night. And as you know, Greenspan would talk in all kinds of gibberish. And during
people tried to figure out what he was going to do by whether or not his briefcase looked full or not. and you probably even remember the days when the money supply releases on Friday were big market movers.
Exactly. People would wait for that and not take off for the weekend yet. But again, this is the world has gotten smaller, and Federal Reserve and central banks have united together since 2007, 2008, 2009, and really have put a protective put underneath the market by adding liquidity at every single correction, every single pullback, and any sign of trouble. It's almost, I call it to my members and my subscribers, that it's almost a national defense system, because they want to protect their economy against foreign adversaries and things like that. So do you believe there is a plunge protection team? Oh, absolutely, and I think not just in the United States, but it's a global synchronized type thing, and that's why I said the biggest theme that we have right now today at the second is a global synchronized rally, and it's all from the bottoms in both the United States, Europe, and China's in some type of a bubble right now, but that's something for probably a whole day subject. But the fact is that we've got so much protection while VIX is at nothing, and there's no movement more or less in our trades. And again, there's no doubt in my mind over the last 9 years that the central banks and all kinds of protection has been put in place so as to not have another depressive-like period. Okay, so we can never really have a bear market again. And that's what they want you to believe, and that's what they want the public to believe. I think they want the. How about what you believe? Well, I believe that we're going to have an amazing another depression, probably, sometime by 2020. Again, it's within probably 36 months at the most, and 6 months at the least. I think, like I say, the old nature will rule type of thing. We will have another recession, and we will probably have a huge scare. We've got you can't take away what's gonna pop the bubble. Could it be like I've talked to Martin Armstrong, and let's face it, cheap rates have buoyed everything, real estate, equities, etc. Correct. So could it be the bond vigilantes starting in Europe with the way the Bund looks now and the dollar being under pressure, that it could be a bear market in bonds? I mean, bonds look
like they're, they peaked. We tried to recover in the bond market over the last several months, and now it looks like they could be headed again down to new lows or break through that 265 10-year level.
Right.
Do you think that rates are going to be the pin that pops the bubble?
I think it's actually going to be the other way around, to be quite honest.
Really?
I think
it's too strong of a dollar?
I think it'll be a recession. I think that we can't agree on anything, so it'll be, a budget deficit, debt ceiling not met, a downgrade of USA again. It'll be something along that line that will be more depressive than stimulative. Everybody thinks, and my last 11 years I've done 90% of my really hard research in sentiment, and the fact is everybody thinks that this bull market will end with 5% GDP and everything running hot and all this stuff, and I think it'll be the opposite. I think it'll be the plain old end of an economic cycle. You look at four major reasons why markets end up turning negative and going into a bear market, and you look at the things that out there that could cause a global unrest, again, too protective of a Fed, and none of those things right now. We are dying to get some inflation going, but we can't. As you know, Japan has been pushing. They'll never reach their targets. We'll probably never reach our targets. My biggest fear for the next real break in markets and in financials is recession. And I think it could come as soon as late 2019. And it will be on the back of some things that we probably don't even know that will happen. A lot of things we know, like student loans and subprime autos, and the Canadian banks had a real tough time, and they just hiked rates to help them out a little bit. There's things out there that they're around, but you don't really talk about much. But I think that's the way it will end, is not in the grand 99 type scheme where everything is just going up every day and the economy's hitting on all cylinders like it is now. Global synchronized rally from, as I tell my members, from Shanghai to Vietnam to New York and San Francisco. I mean, this is one of the best weeks, if you believe it or not, of this bull market. If you look at the EDC, which is the 3 times long world index, the EDC has had like a 20% up week, and these are, this is a simple ETF that gets a ton of volume. The world index has skyrocketed this week, had one of the best weeks since 2011. So it's buoyed worldwide, and now we're getting dragged along. I think we're 23rd, Dale. I think
we're way underperforming. Is that because of the dollar weakness that we've seen, emerging market currencies?
Dollar weakness, and as you know, after Donald Trump was elected, we boomed and kind of led, and since we haven't been able to accomplish anything at the White House, some of that has slowed down, while the rest of the world has just really banged up. I mean, I think we're 23rd in the list of gainers for the year. We're doing pretty good today, obviously, and setting new records today and trying to catch up. But I've always said in 2017 that we'll be dragged along by the rest of the world, and that's exactly what's happening so far. As the rest of the world is just dragging us, while we're up about 10%. The rest of the world is 20 to 30% up, which
just really began this year. It's been the other way around for a long time. Absolutely. Is it possible that when the world markets or emerging or anywhere outside, I know a lot of people, like I interviewed Mark Yusko, he really likes emerging markets because there's value there, that when they have hiccups, that because we're a laggard in relative strength, that our pullbacks will be deeper now instead of shallower?
And those are two things that should happen. Volatility obviously should go up, and our pullback should be deeper, because just in the last couple of weeks, you see that a lot of money is pulled out of the United States, even though we're at record highs. You'd think that more money would be pulling in. That's the thing that's happened over the last 50 years. But now money's pulling out of USA, and obviously since emerging markets are going up in the statistics that we follow, the money's going straight into Asia and into Europe. People, the Jamie Dimons of the world just absolutely say that they can't believe the turnarounds in Europe and the progress that they're making, and the money goes, fast money at least, goes to where it gets treated really well. And right now, it seems like Europe, Asia, there's different parts of Asia can't believe that, that's one thing about sentiment is who would think that South Korea would be up, 3 times as much as we are this year, with all the problems with the intercontinental ballistic.
I got an interesting question from Luca. He's going, "Hi Tom, talking about the Fed. What impact do you think make Cohn the nomination for the Fed, reversing Yellen's policies of hikes and weaker dollar in line with Trump's wishes?" So she's up for renomination. She said she'd consider it, I think, sometime near the end of the year. You think that's a possibility, that Yellen's reign ends under Trump?
Oh, absolutely. She's out and Cohen's in, and the fact is that just can't be more psychologically bullish for the people that are betting on this market long right now, just today and since the election. The fact is that, lower regulations, lower taxes, all the things that are in the platform are uber bullish, and you just can't stop it. I spent 6.5 hours yesterday getting my people longer and longer and longer, and say you just cannot stop this. The fact is, when you get at this stage of the market, when you're in a very late stage bull market, and the Fed just put us into, I think the NASDAQ got down 6%. That's our biggest correction of the year. At the worst, the futures did. And there goes the Fed, just turn on a dime from pretty hawkish to right back to uber dovish, and here goes the market just straight up, back up into new highs. And I think that will continue. Like I said before, most people are thinking that the way this ends, and you see the Dalios and the Teppers and things like that, think that it'll get so hot that we'll raise rates a bunch of times and everything. I think it'll be the exact opposite. I don't think we can get out of the way of ourselves, and much like Japan, demographically, we can't grow at 3%. You heard Janet Yellen talk just yesterday, the fact that she would be surprised that in her lifetime if we could grow at 3%, and that's pretty embarrassing, really. So that means any type of crisis that would come up if we do, like I said, the number one concern is global problems with political and war. Any type of war, any type of conflict, again, you don't have much to work with when you're only growing at 1.5%. And
isn't that why the Fed has been raising rates anyway, to prepare to have some tools just in case?
Absolutely, 100% correct, Dale. I don't think they would. I believe that they would have stayed steady at 0 if they could have. But again, they have to have something to deal with down the line. And like you say, we call it the plunge protection team, or we call it the global world order, whatever you want to call it. It's out there and it's there to protect. And we probably should be thankful for it. We shouldn't look at it, but as market purists, I think a lot of us are, we really think that we should be off training wheels right now. We should let all the world economies do what they can. I think that makes for a stronger world, and it makes for better entrepreneurialism, and also gives us low volatility to trade.
Okay, so I'm assuming bullish S&Ps, nothing can stop it. Any upside targets that you have technically? On some of the super bulls I've talked to, like Peter, what was his name? Not Peter Temple, he's a long-term bear. Peter Goodburn, Elliottician, thinking 2,700 by the end of the year, and then a 30% pullback to 21. but then eventually 4,200 S&Ps.
Really,
so
yeah.
That's big picture stuff.
Yeah, big picture. If I had a big picture, I'd be along kind of that line. But again, once we have that first really big correction, which I think will probably have to happen by, November at the latest. Again, I think we can easily go to 2,700 in between now and November if the current regime stays in place, meaning that nothing happens news-wise. We can go to 2,700 pretty easy. There's no doubt about that. But the fact is, if we do get a break, say before November, say if we have our typical, August, September, October type of splash 5% or so, I think that it could go a lot deeper just because we are so, just basically fundamentally overvalued. Our country, the United States of America, lower dollars helping us out on corporate profits, but again, you can see from, just the things that have happened this week, stupid things like, Fastenal reports beats on both sides, and it's a very heavy cyclical, and it goes down big. JP Morgan, beats on both sides today. They go down. The expectations on everything are at absolutely perfect levels right now.
Right. So interesting you bring up that fall time frame. I want to ask you, you watch a lot of markets, and there's been a lot of discussion about market structure, Tom, and in the precious metals we've had these like 30-second 1-minute flash crashes where they just go and clean out every stop, and kind of had that in Amazon one day that when you and I were new in the business, we had open outcry. There were humans involved in this.
Always something.
Could market structure be the reason that we could go deeper than what we would normally do, because the machines are running the markets and bids just disappear for a period of time?
Right. And that's why, especially in the Forex business, I mean, it just amazes me every day when I watch the Forex that again there's not more risk of these fat finger trades and these mistakes that turn into something deeper. I think that with the election stuff that we went through, with the hacking that's out there and everything else like that, the cyber crime, so to speak, of the next decade will be in some of the Forex areas and the currency areas that are so easily I think attacked, and that's a scary thing to look forward to, is the fact that these defenses aren't strong enough yet. We saw an election both in France and here that was pretty much disrupted by cyber attacks. There's no reason to think that again, the attacks won't get geared more towards our financial systems, and that's a scary thought going forward, because we've seen, I still have clients and subscribers from back in 2007, 2008, 2009 that lost all their money on simple things like money market funds. Again, that went broke. Again, people have almost forgotten about things like that. And I think once they get reminded, because we have been nailed in our lifetime anyway with 87 and 99 and 2007, those were all things that stick in the back of your mind.
Yeah. I was going to ask you, since I see you were in the room and you were talking about gold, I thought we might switch gears again here. And you said it's one of your largest positions here. I put the gold chart up for you. Tell us what you're looking for in this instrument.
Well, gold again.
And I know you buy the shares too, so go ahead.
Right. We do our favorite positions again in gold are leverage. We really like extremes, and as you can tell from the chart earlier this year, back at our Christmas break, we got long of gold just on a sentiment buy signal. We really like to deal with extremes because we feel like as leverage.
Did you learn that, Tom? I gotta call you on this. Did you learn that from Dennis Gartman of gold? Well, okay, you know what I'm talking about, don't you, buddy? I mean, he's the only one I ever heard. He goes, well, I'm long of this against this. I'm short of this. Did you learn that from Dennis Gartner?
No, but I never ever trade anything against anything else. Really, I'm like Marty Zweig. I was brought up with the fact that you make your trade and you stick with it. You put your stops in and you let it run. Jesse Livermore type stuff. Again, I'm not much on pairs trade. That's why I said with hedges, I like to use straight out. Futures if I want to hedge myself. But in like a position like gold, I just feel like gold over the next year will ultimately outperform a lot of other assets just due to where we are sentiment-wise. Like I mentioned back at Christmas break of 2016, we had gotten extremely
great buy.
Yeah, great buy. It was it actually fell right into Christmas, and we actually had a little correction. Actually, one of the last corrections we've really had for the S&Ps right at the towards the end of the year. And again, it's really interesting that the sentiment in gold, as you know, gold bugs, they're really an emotional trade. Out of all the things that we trade, I don't know what you think, Dale, but I think gold and precious metals is probably the most emotional trade there is out there. People really get, this is my gold, this is my silver, this is mine. So the sentiment portion of gold, I really do a lot of really hard work on. And to be quite honest, one of my greatest lines and that I borrowed again from Dr. Zweig is, gold and precious metals always end up in tears. And I'm sure you've heard that before because gold has broken more people's hearts. So when I was managing money, I had more, families come in and say, gosh, my junior gold miner is down 64% and we have to sell everything. And, so it's always, it's never been a great trade of mine. But over the last, since I've been running our Traders Elite Room since 2001, I've really used gold a lot wiser and traded it a lot better, just simply going from a non-emotional sentiment bias. And sentiment got really, really poor at the end of the year, and we bought into the gold futures and into ETFs at right at the end of the year, stayed long. We got stopped out in that October pullback and then got back in again right just recently, actually right around the 4th of July. And we've got targets of 1310 just short term here. So again, that 1310 area.
If it stops out, a lot of people will be calling it a breakout, and that's where you'll be going to the door.
Absolutely.
I guess a lot of people, if you want to look at the most bullish possibility, say that what happened in 15, the end of 15 was the beginning of this new move, and then we put in a higher low for 2, and we're either starting 3 or C, and we're getting a pullback in here, which would be this is a weekly, be our 3rd higher low, and we're going to break out over 1300, and it could be a huge move. I know a lot of people that are talking 1500 or so on the gold. I'm just trying to pull up, they're a little longer term view on gold, and the dollar's peaked for the year. But even that, a rally back to 1500 would just be a corrective move off this big decline. I'm sorry, I'm interviewing myself, but maybe it's A, B, A, B, C up to here. So wow, it's on a 50-month moving average right here.
Right, and it's a time where you can tell from the volumes also that people hate gold. They really do, and they hate to talk about it. I've got professional traders in the room that just they get mad at me, get physically mad. I think at times, even when I bring up gold.
That's funny. They have reasons though. I mean, you look at all the paper out there, and they are able to move the market with paper. In fact, you know, one of the original gold bugs, Jim Sinclair, that's why he started an exchange, I think in Shanghai, where it's cash and carry. And he talks about the emancipation of gold and silver from the paper market. So just like there's a plunge protection team, a lot of precious metal traders believe there's a team that does all they can to put a cap on gold, because Larry Williams used to say the price of gold going up is like a rising temperature for financial conditions, which, you know, if you get too much of a fever, it's not healthy when gold in the market and everything's going up together, because gold is more about, you know, I call copper the metal of construction and gold the metal of destruction, destruction. So, yeah, nice call there on the gold. So you're bullish everything.
Yeah, this is one of those times, and at least in the short period, that where just everything's going to go up. I mean, look at the bond market today. Look at gold. Look at stocks. Look at oil. I mean, it's one of those rare times when it's a Fed-induced global synchronized type rally, but it is, you know, it is late cycle, Dale, and we gotta understand that you know, this will end, but you know, I'm a short-term market timer.
Yeah, so I mean, you know, it ends 2 years from now. It's that's a lifetime to me.
Exactly. We cannot, you know, we have to trade what's in front of us, and right now, you know, up is in front of us, and you know, when you look at long term for somebody my age is you know, right into August, I think. But we go day by day as traders, and we learn a lot day by day. And the fact is that I don't think anybody would have ever thought that we would be, you know, sitting here after an election. I'm sure you remember election night with that.
Yeah, I do. Horrendous. I was surprised. I was surprised it came off limit down.
Yeah.
But I didn't know Icon left the celebration party to go buy $1 billion next. So, you know, he's on the plunge protection team too, I guess. But
exactly, and who would have thought with you know, we're going into our 7th month here, and there hasn't been anything accomplished towards the Trump agenda really, other than a lot of the executive orders, which are fine because they're leading people, you know, to one of the things that I didn't mention about fears. I don't know whether you pay any attention to it, but Dr. Zweig used to do a lot of work in balance sheets and things like that. He would create all kinds of signals and indicators. Just fascinating to watch and fascinating to study even today. But one of the things that has even new Treasury Secretary Mnuchin worried is the fact that tax receipts have dropped off so much. People just are not paying their taxes, and that's going to really hurt in the next 6 to 9 months when we go to negotiations on a debt ceiling and things like that. And that's one of those things that I didn't mention earlier, but the fact is people just aren't paying their tax. We've seen the biggest drop in tax receipts we've seen since the 70s, and that might be something. All of a sudden people really truly believe that they don't have to pay taxes, and when that revenue doesn't come in, and when we're actually cutting taxes, where in the world is the money going to come from other than the printing press?
Right. What a great discussion, Tom. You want to tell the community that I'm sure are interested in the discussion. We're getting some nice comments here. How they could follow you. I know your Twitter handle is @TomandPrishna. And who's Prishna?
Prisha, that's my wife, my lovely wife.
Okay, Prisha. Okay.
42 years. Yeah. Just follow me at Tom and Prisha on Twitter. That's the easiest way. I've got a link to my website, tttHedge.com there, and I don't post very much on the website, but Twitter has turned into such a great place for traders. Like I said, that's where I met you and your great group and all your followers, and I think it's a tremendous opportunity for individual investors to get really quality information. Again, you can sort out what you believe are, people that know something about the market, and you can block people that don't know much about the market. So again, we get a little bit of both in that.
There's an expression, you don't know if somebody cares until you block them. Ever hear that one?
That is the, we are in the Twitter society now, aren't we?
I'm the king blocker, and then I unblock, and the whole thing. Anyway, Tom, I want to say that it was great that I invited you and you came and you had patience. We needed FX content on the original date, but I would love to talk to you again a little bit further down the line, maybe into the fall, and see what your thoughts are. And so you have a trading room, and there's a monthly subscription fee for that to be in your room?
Yeah, and we do it on a yearly basis. It's kind of weird the way that my room has progressed. We had several thousand back in the early 2000s, but I moved it into because, just because I always say, out of all the things that we do, time is our biggest resource. And
right.
We have no idea whether we're going to, our next breath is going to come from here. So again, we cut it down to where I have owners, not members. I don't really have subscribers. I have a few subscribers just on email, but I want our traders that are in the room, and all the traders that are in my room are elite type based traders where they really know what they're doing, and they know the risks. They know that if I screw up, it's not because I want them to lose money. It's because I really had a good theme, a good idea, a good thesis. I've got facts to back it, and I'm taking a position with a trailing stop, and if it works out, everybody's better off. If it doesn't, you take your loss and you move on to next stage. So we're very simple. It's a lot of fun every day to wake up and have the opportunity to invest. I mean, there's a lot of places where you can't do that with, again, such a low cost of investing, and it doesn't take much entry to get in, and I can't think of a better place to be right now in 2017.
All right, partner. Well, you are now my trading warrior brother. And,
right.
I hope for the best for you and your trades and your community, and I know I really enjoy interacting with people, social trading. We only have 2 eyes, Tom, even if they're trained. Better to have 100 trained eyes collaborating. So I agree with you in your mission, and thank you so much for your time again today. Everyone, thank Tom Malone for a great discussion and a few ideas and a look down the road. Thanks for bringing your telescope today, Tom. And
you bet.
I'll drop the link of the interview on Twitter. I'll tweet it and drop it off to you. So have a great weekend, my trading warrior brother.
Thank you, and anytime, Dale. I really appreciate it, and best to all your traders out there.
Thank you, buddy. All right, Face, we went a little overtime, but I know you don't care. I think we had a decent week, and look forward to killing it with you guys again next week. Remember, most of all, don't just count your pips, count your blessings, and I hope you feel that this free room for you is a blessing, and if you want to reciprocate, become a subscriber. The link's right there. Have a great weekend, everyone. Enjoy your summer, and I'll see everyone on Monday. Thank you, Steve Volge. Thank you, Blake. Thank you, Greg Horvat, for coming in here and clearing up a few things. There should be some nice setup shorts and cable and Euro next week. Adios. See you, Ronan.